morning. This is Rich Sierra, CEO of the Florida Small Business Legal Center. This is episode 53 of Business SOS. Last week, we celebrated our 1-year anniversary of the podcast. Thank you for listening. Now we're in year number 2, so I'm very excited to bring you some new content and some very special guests throughout the year. So I'm very excited that you're listening to me, and thank you again for listening now for a year. And I hope the information that I provided to you has been helpful to you, and you have actually gotten some nuggets and some information that will help you navigate the treacherous waters of a small business ownership. So I always begin with the show, and if you want to reach me, my email is richsierra.com. And if you have a legal question that you'd like me to address, you'd like me to answer for you, please send me an email. And if I select your question and I'll address it in the show, I'll send you a free copy of my book, Business SOS, 8 Common Legal Mistakes Business Owners Make and How to Avoid Them, which is available on Amazon and Barnes & Noble. You can ask for it at your local bookstores. Also, if you want to learn more about our legal services, my website is floridasmallbusinesslegalcenter.com. So let's get right into it. Today, I want to talk about 5 common mistakes business owners make when buying a business. I've handled hundreds of these transactions and throughout my now going on 20-year career, and the mistakes are very common, and I see them even just as recent as just 2 weeks ago. So I want to talk about these mistakes because there's a tendency when somebody's going to buy a business, it's similar to buying a house, and it is not the case. When you're going to buy a residential property, there are a lot of protections that are kind of embedded or part of the process simply because you have a title company that gets involved. Usually it's a mortgage company. There's some appraisals, and the bank is not going to finance the property unless there's a checklist that has been completed. And so in a sense, they are protecting the collateral, which is the property, by making sure that all these contingencies are met. That's even before they approve the loan. You also have the ability to inspect the property through a certified inspector and get a report. So there's a little more formality and more consistency, uniformity when you're buying a residential property than when you're buying a business. When you're buying a business, it can be as simple as buying one single piece of paper about the business, and I certainly do not recommend that. I'm telling you that the reason I'm sharing this with you is that there are no formal requirements or formal process for you to buy a business, and it can be something as simple as a 1-page document, something as complex as a 100-page document, or several documents that include over 100 pages. So there are some standard documents that we have, those of us who actually represent buyers and sellers in either buying or selling a business, but not everybody uses the same documents. Not all the documents are the same. So I want to share that with you to kind of give you that awareness that if you're interested in buying a business, the first mistake that many business owners make is not hiring a lawyer, hiring an attorney to help him or her with this transaction. And I've gotten comments before, my business broker tells me I don't need a lawyer, they handle everything. That is not true. The reality, you're not required to, and I'm sorry I keep dealing with my headset here. Okay, now it's good. There are no requirements for you to get an attorney, whether it's residential property or commercial or a business. It is highly recommended for your protection. Business brokers, for the most part, their job is to sell that business. They're representing the seller. They're not representing you. And you can have a business broker that are representing you as well, and you can work out whatever commission structure without, buyer's representative as well. And in fact, I want to bring some point a business broker that I know that I have worked with him in some transactions to talk more about that process. But business brokers get paid when the deal closes. It's a commission-based structure. So as much as they want to help you, their self-interest is to close the deal to make the commission. So they're not really representing you. The business broker contracts, they're prepared by the business broker company and is designed to protect that company, to protect the business broker. So as much as they want to help you, please understand they're not representing you. They're representing their company, representing the seller. There are a lot of disclaimers in those contracts. I don't need to go into that right now. It's not relevant to what we're going to talk about here. But an attorney will help you understand what you're getting into and tell you perhaps things you do not want to hear. And I say that to my clients often. And sometimes I've been able to, in some cases, talk them out of really making bad financial decisions, making very bad legal decisions in the purchase of a business because we look at it from a different perspective, especially if we understand business. So that's one of the mistakes that many business owners make when buying a business, not hiring an attorney. I recommend you hire one that actually understands how to do these transactions, and number two, that has done it before. That is very important. A second mistake that business owners make when buying a business, and I'm going to spend a few more minutes in this one, is inadequate due diligence. If you recall, back in, I think it was September of last year, I actually did a 2-part series talking about due diligence process and buying a business. And in fact, I offered my due diligence checklist, which I brought it with me today, to anybody who's interested in having that checklist. I'm happy to share it with you. If you send me an email, just put in a subject line, due diligence checklist, and I'm happy to send it to you. And it's simply a checklist that I use when I represent my clients when they're buying a business. And it's a very comprehensive list. And in many cases, I get complaints that, well, do I really need to ask for all these documents? And I said, the answer is yes, ask for them. If they don't have them, they don't have them. If it's not applicable, write not applicable. I'd rather be more expansive in my request than be limited in my request. And because later on, as I'll explain to you, it is important to have that and then to sign it. And that document becomes important to me later on if the deal, something happens throughout the transaction that was not represented or something that was not said or disclosed. I go straight to my list and say, what did they say about this question? And I'll give you an example as well. Okay. So why is common areas that are overlooked in the due diligence process? Okay. You need to ask, one of the things that I ask for, obviously, I'll ask for the last 3 or 4 years of tax returns. And for the most part, they have them. Profit and loss statements, financials. People look at the tax returns, unfortunately, as like, well, this is the way the company's making money. The tax returns is a reporting document for the IRS. It's not necessarily a way that you evaluate a business. And business valuation is a different conversation altogether. But it begins to put the picture together. An area that is usually overlooked is like, okay, so how are you paying your employees? Whether they're 1099 or W-2. And unfortunately, many small business owners, they pay their employees as independent contractors. And I went over that before, should not be the case. If they're employees, they get paid a salary, they get a W-2, they're independent contractors, maybe they come in, they do a project for you. I usually use examples as a graphic designer, that would be a 1099. But they have to get paid as employees. But I want to find out whether they're using a payroll company or they're doing the payroll themselves. This is extremely important. If they're using a payroll company, for the most part, they're sending their reports required by the state of Florida in this case. They're saying they're sending their reports to the IRS, whether it's the R6 to the state of Florida or the 941 to the quarter reports, reporting their tax obligations and reporting how much they basically collected and paid in payroll, how much they paid in Social Security. In the case of Florida, how much paid for unemployment taxes. So those reports are important to have, and they're usually overlooked. If they're paying, saying, well, I have employees, but they work full time and I pay them as independent contractors, that is a red flag. And that's something you need to consult with your attorney how to handle that. Okay, those employees later on can end up suing for back wages, they can pay for overtime, So then we need to create some indemnities provisions so that way you're not going to affect it if you're the one buying the business. So that's usually overlooked when people are asking for tax returns. Another area that is overlooked as well is sales tax reports. If the business collects sales taxes, they have to, in the case of Florida, which this is where we are, there's a reporting mechanism. There's a reporting, quarterly reporting that has to be done with the state of Florida, the Florida Department of Revenue. And I want to get the sales tax report. It tells me two things. A, they're collecting sales tax and they're paying it to the state the way they're supposed to. And number two, that really gives me a more realistic sales number as to how much money the business is generating. Because it's really more like in real time. If they're calculating the sales taxes automatically, if it's a restaurant, if it's a retail establishment, then I can see, okay, this is what they're collecting revenue, this is what they're paying on a monthly basis, this is the quarterly report. So this is a more realistic figure because they're reporting it. I also want to know whether or not those tax returns are prepared by the business owner or prepared by an accounting firm. And that is also important. If it's prepared by the business owner, then, there has to be, you got to put a little more scrutiny unless the business owner is an accountant or a CPA, which could happen, but it doesn't happen very often. So you got to put more scrutiny, and perhaps you got to have your own accountant take a look at the tax returns and tell you, are they correct? What's going on here, to give you a better idea whether or not those tax returns reflect the activity in the business. And you also have to look at the bank statements as well. You're not going to do a complete audit, but you need to begin to gather those documents as well. So sales tax returns will tell me how much they're selling, how much they're paying the state. Now, if they're basically say we collect sales tax, but we're behind in paying sales taxes, that's going to be a problem. Okay? Because if you buy that business, you can end up on the hook for those sales taxes. That's why it's important to have an attorney review that and help you with the due diligence to uncover hidden debts or undisclosed debts that you might end up inheriting in the future. So another area that is overlooked, and I think I'm kind of going over various topics here, went over the tax returns, is the bank statements. I asked for like 3 years of bank statements, sometimes even more. And the bank statements will tell you the cash flow of the business, will tell you the activity, will tell you how much the owner is getting paid from the business, whether it's a direct check or whether it's a salary. That cash flow is very important, and you need to have a cash flow analysis on that business because that's going to determine how much working capital do you need to be able to run that business. And in some cases, and to my surprise, clients have closed on businesses, and I said, what happened to those other bank statements? Well, they don't want to give them to me. And I'm like, what did you close? You have to be assertive about, and there's some non-negotiables here regarding buying a business. If they don't provide you the documents that you're asking for, you do not have to close. And a mistake that many business owners make, they fall in love with the idea of buying a business. And I tell my client, don't get emotionally attached to this business. It's just a business. Okay, it's a business transaction. The idea is fun. There's no glamour in owning a business, trust me. Okay? But they get so attached to it that they forget to ask important questions, and they do not become assertive enough to say, all right, this is the deal. You do not provide these documents to me in a timely fashion. We're not closing, and I'm out. You have to be able to walk away from this. And I've seen many transactions, I've involved many litigations that the business owners themselves get so attached to the idea, and they go full force where their sense of rational thinking goes out of the window for the idea of owning the business, that they make devastating financial decisions. So if they don't want to provide you documents or they slow walk the giving you documents, that is a red flag as well. The seller, if he's selling a business, especially to a broker, should have those documents available the first day when you ask for them. They should prep. They should be ready to sell. It should not be like, I'll give it to you in 10 days, 15 days. I'm like, you have this listing with a business broker. What you have been doing for the last 3 weeks? I mean, that's something that we're going to be requesting. So how the business owner provides information gives you a sense how the business is running. Because you're buying a business that is already running, generating revenue, you might end up retaining some of those employees as well. So you have to be vigilant about how that information is provided to you and the quality and the accuracy of that information. And many business owners just overlook that, and they don't get the proper advice, or against the advice, they decide to go forward. But this is critical. The more time you spend in due diligence, the better for you. And if by any chance it doesn't work out, you decide not to pursue it. Not a big deal. There are other opportunities. But getting emotionally attached is a problem. Let's see what other mistake. I forgot I have the number. Okay. One mistake that I see is overlooking what I call legal obligations or licensing requirements. Often, we ask for all the licenses, all the certifications, business tax receipts, everything. And at times, business owners do not have those. And you can end up buying a business that is operating without the proper license. And this is extremely important to request it. And by not asking those questions, they're not going to provide that information to you if you don't ask for it. So business tax receipt, if they require a license by the state, they require a liquor license, they require, obviously in most municipalities, you have a city business tax receipt, a county business tax receipt, which used to be called the occupational license. You want to have all those documents in to make sure they're current. The merchant account as well. How is that going to be handled? What type of transition is going to be handled with the merchant account? And I've had situations that, and it happens in retail a lot, that there's a merchant account that is being used, which is the one for the business owner, the current business owner. The new business owner is going to come in. They have to apply for a brand new merchant account. You cannot take over the prior business owner's merchant account because that money is going to go to the business owner's bank account and sometimes to the personal account. So how that is going to work out is important to have that clear. In some cases, merchant accounts have holdbacks. Maybe 10%, depending on the length of the business, it might be, or the risk that the merchant might be taking. You might have a situation that the merchant himself decides, okay, we're going to hold back a certain amount of money and we're going to release it in 60 or 90 days. So you have to ask that question, is there any holdbacks here from the merchant? So we are aware of it. If we're going to take over this merchant account, we need to be aware of that because that's cash flow that you don't have to run your business. Any loan obligations that the business may have. Clearly, if you're buying the business, you do not want to have loan obligations. Some things that is overlooked is whether or not there are liens on that business. And the liens are public. You have to go to Florida Transaction Registry, whether or not the business has a UCC1. That's a lien. And whether or not it has been released through a UCC3. Again, you most likely will not know this, but a business attorney will know that to ask those questions and do the due diligence and do the investigation required to make sure that when you buy that business, it's free and clear and you don't have any hidden debts coming to you, any hidden collections, and the collateral is not attached. So you got to make sure that that is clear of any encumbrances that you might have. And again, that's part of my due diligence checklist. And again, if you send me an email, I send it to you free of charge. And again, this is not considered legal advice. It is a checklist. And for every business that I represent, I customize some items, but it's a good starting point. It is a good starting point, and I'm happy to send it to you. I said thank you for listening to me because I think it is valuable information for you to have. And if it helps you ask more questions, you'll have better answers. If you don't ask the questions, you'll have, they're only going to give you what you ask for. Business brokers sometimes tend to minimize the documents that you need, or simplify them, if I may, simply because they want to kind of move forward and close the deal. Yeah, you ask for a tax return and bank statements. That's going to give you the whole story. Okay, you need to ask for social media accounts, Facebook. You need to look at the reviews, any complaints, any lawsuits. There's a lot of things that we look for to make sure that the business that you're buying does not have any red flags that will prevent you from running the business, or when you begin to run the business, you might have an issue with it. So you're also dealing with employees as well. Any workers' comp claims, any unemployment claims, are they paying the overtime? Okay, and there are letters that we request to make sure that all that is handled. But that's something that you need to talk to a business attorney to make sure that that is properly covered. Another mistake that I think I'm mistake number 3 or 4. Let's count. Okay, this is number 4. Okay, it goes in the theme of when business owners get attached to a business emotionally. It happens a lot with franchises. People go to the franchise expos. I mean, they're great. It's great to get information. And they really get hung up, or they really get excited about the possibility of owning a business. And it is exciting to have your business. It is a roller coaster ride, as I mentioned before. It is a lot of fun, but it's a lot of work. So the expectation that you're going to go into a franchise, in this case, and just take a 2-week course, pay $40,000, $50,000 or a franchise fee, and you're going to start making money immediately, it is completely unrealistic. Does not work that way. There's going to be a lot of mistakes along the way you're going to make, and it's part of it. There's going to be a lot of learning curves, but people get excited about it. 2-week training, you're good to go. You're going to own a franchise. You're going to make a lot of money. It does not work that way. Okay. It's just, my experience, it's just a lot of work, a lot of headaches, a lot of heartaches. It is worth it at the end. But you have to have realistic expectations how you're going to run that business. So one of the things that I see here is that when I ask my clients, okay, is the business generating money? Well, I don't know that this is what the tax returns say they made $300,000 last year. I say, fine. Okay, what is the net? What is the average monthly revenue for this business? They don't know. What is the average net profit for this business? What are the operating costs? What is the payroll cost? So, have you got any performance in this business? The cash flow analysis. Obviously they're not going to take any debt, so that's their problem. Okay. So they have a very optimistic view on what the business is going to generate, because the business owner told them, I'm making a lot of money in this business. When you really come down to it, you need to break down by month and look at a historical perspective of 6 months and 1 year and find out whether it's seasonal or not, whether it's a specific season that the business peaks in the revenue, whether it's slow times. And the way you do that is through a cash flow analysis. An accountant can help you with that. In fact, there's softwares that can help you with that now. So you don't even have to, in some cases, get an accountant, but you should know how to run these numbers. Now, if this is your first business, you definitely highly recommend get an accountant, get an attorney. Don't go at this alone. I see many people that work in corporate jobs and they want to venture into business ownership, and then they find out it's completely different. If you already had a business before you own a business, you already have gone through a learning curve, and you know what to ask. So it is important to have the right team in place, especially if you're going to invest money that perhaps you're borrowing, money from your retirement account, from money per hour bonus. And in some transactions that I've seen in the $500,000 range, and people do these without an attorney or without an accountant, or they want to do it themselves. Okay, and that's just not a good idea. That's my opinion. Get the professional advice. You might spend a few $1,000s, but it could save you hundreds of thousands of dollars along the way. So that is basically my takeaway. But understanding how the business makes money and how you, when you step into this business, when you get through a transition, how you're going to operate this business is very important. It's not going to be turnkey. You're not going to step in and say, okay, I'm going to sit back and it's going to run by itself. Most likely it won't. You have to basically work with the seller in having the proper transition to make sure that you take over this business and make it work for you. Which brings me to another point. It's not a mistake. The last mistake I want to talk about brings me to another point is that whether or not you will the seller would finance the loan or were you going to pay it cash all at once. There's two schools of thought of that. You pay it all at once, you're done with it, you don't have to pay any obligations. Once you do that, the seller most likely is not going to be around. Okay, they'll give you the 2 weeks transition, and after that, seller is gone. Okay, go to a different country. In some cases that happen, which we know it's fine, nothing wrong with that. Okay, but it's very unlikely that once the cash deal is done, that the seller is going to be motivated to assist you along the way. Now, if the seller is willing to finance the deal, whether it's 20%, 10%, and you got to pay monthly payments on that note, at a low percent interest, the seller has an invested interest in helping you succeed because that note has to be repaid most likely from the revenue of the business. Keep that in mind when you're trying to structure a deal. And again, a business attorney can help you structure a deal like that to make sure that you're not only protected when you buy the business, but also there's a likelihood you will be protected throughout, at least for the first 2 years. Because you're going to need that time for transition. Last but not least, one of the things that I see when you buy a business, for the most part, you will go into a lease agreement, unless you're buying the building, which is fine, the property. But for the most part, there will be a lease involved with a landlord. And it is overlooked that the business owner comes in and says, we're going to assume the lease. He told me I can just take over his lease and start making payments. It does not work that way. In order for you to have a lease assignment, you need to have the landlord's consent. In prior episodes, I think one of my first episodes, I talked about lease agreements, and I'm probably going to revisit that topic later on, especially if you're coming new to the podcast, because lease agreements are very important. So it is important to have landlord's consent, but it's also to understand and negotiate when that lease will end. If the lease ends in 2 years, you're buying this business, guess what? The landlord has no obligation to extend that lease. So you have to make sure that when you step into this business, you have a lease agreement that will be there for the number of years that you believe this business will get your investment back, but also perhaps sell the business, or you decide whether or not I want to give this 5 years, see how it works. If it works, I'll continue. If it doesn't, I won't. But an attorney can help you negotiate the proper lease, so it gives you the time necessary for you to figure out whether this business is right for you and make it work. You have a short-term lease and the landlord says, no, we'll negotiate the lease at the end. That's a bad idea because you don't know what the lease payments are going to be 2 years from now if it's not negotiated in advance. So you have to keep that in mind, and many people overlook that. And I've seen cases that the buyer is making payments to the seller directly for the lease. And then so the landlord has no idea who's in that property. So that's something that I do not recommend. I recommend if you're going to have a lease, you have to deal directly with the landlord. And again, there's topics regarding lease agreements that I'll probably bring back at some point. So just kind of to recap some of the mistakes that business owners make when buying a business. Mistake number one, not using an attorney to buy the business. I certainly recommend you do that. Overlooking legal obligations, licensing requirements for that business, and kind of like not making sure that the business that is operating is authorized to operate in the city or county that it's operating on. Unrealistic sales projections or attachment lack of understanding how the business is going to generate revenue. That's mistake. I think number 4. Yeah, number 4. I skipped 1. Inadequate due diligence. I spent a great deal of time there. Now I have the 4 ones that I was looking at. So due diligence is extremely important. Again, you can have my due diligence checklist if you send me an email at rich@richsierra.com. And last but not least, failure to negotiate a proper lease assignment or a new lease with the landlord. So those are 5 mistakes. They're very important. If you're looking to buy a business, if you're interested in our services, send me an email or check out our website at floridasmallbusinesslegalcenter.com or get a business attorney that can help you. But I do not recommend you go at this alone. It's a high-stakes game. And if the other side is represented by counsel, you need to get your own attorney. One attorney can represent both parties. So you want to make you aware of that. And the business broker is not your representative, representing the seller. So be aware of that as well. So I think this is good for today. Again, if you want to reach me, my email is rich@richsierra.com. My website is floridasmallbusinesslegalcenter.com. We're at Facebook at FSB Legal. If you'd like to watch the video of this podcast, we're at youtube.com/Richard Sierra. We're on Instagram at FSB Legal. You want to give us a call? Our number is 866-842-5202. Remember that business SOS, 8 common legal mistakes business owners make and how to avoid them. It's available on Amazon, Barnes & Noble. You can ask for your local bookstores. If you like the podcast, I appreciate you follow us. Remember to follow us and also give us a 5-star review. That helps the algorithms promote the show to other business owners. Share with your friends and colleagues as well. We're on Apple or Spotify, wherever you enjoy your shows. Until next week, this is Rich Sierra. Remember that my goal is to help you succeed.